Over the past 10 weeks, I've been speaking to business owners and directors about how the coronavirus pandemic has impacted their businesses. Now we have 3 months of data. I'm going to look at the impact on sales, past and future, business sentiment, the proportion of employees who are furloughed, the proportion of employees who are working remotely, and how this reflects compared to the FTSE 100. I'm John Passmore, and I'm a director and consultant at 2SB Management Systems. The first graph we're going to consider is how sales have been impacted between March and May. Although March does show some impact from the pandemic, April and May have been much worse for businesses. Now in May, 60% of the businesses we spoke to report a large negative impact of over 20%. One telltale sign about how fortunes may change is the predictability of sales moving forwards. The ability to predict sales remains elusive, with normal buying habits being disrupted for both consumers and businesses. Consumers and businesses are still sitting on the fence, waiting for that trigger that will have a butterfly effect throughout the whole economy. Perhaps the most interesting graph for me is how business sentiment has been changing week to week. A score of 1 here means that businesses are slightly positive, 0 means they're neither positive nor negative, and -1 means slightly negative. Business sentiment has changed both in terms of 3, 6 and 12 months, but also over time. The anticipation of the easing of lockdown is perhaps the explanation for the bounce at the start of May. And then, as we realise the impacts have not been as significant as hoped, we've seen a plateauing and slight dip since then. Now, we're going to look at the proportion of employees furloughed and whether opening up the country on May 11th a little bit more has impacted these numbers. The proportion of employees furloughed from April to beginning of May rose, and then from May has remained steady. Despite the easing of lockdown, there's been no decline, and this is perhaps not surprising given May sales figures and that the June and July sales pipelines are so difficult to predict. The companies that we've been asking these questions to range from manufacturing and engineering through to digital marketing and technology. In line with government guidance, only the essential workers have been returned. Those that can work entirely or largely remotely are doing so. Businesses are starting to make tentative plans to return their staff, but there's no rush to do so. Finally, we're going to look at how the FTSE 100 has been performing over the past 3 months. Despite the pandemic adding 25% to UK government debt and 25% of the UK labour force being put on furlough schemes, the FTSE 100 has continued to rise. There are a number of reasons for this, including the optimism that economies are emerging from the worst of the effects of the pandemic and the willingness of the governments to use fiscal and monetary policy to support the economy in big ways. The stock markets are bolstered by tech stocks, pharmaceutical industry, home delivery and online gambling, but never has the price to earning ratio of stocks been so high, with investors banking on future growth rather than immediate returns and profit. Clearly the stock markets do not reflect the reality for small and medium-sized businesses and the overall health of the economy. Although there are many challenges, we have to make the most of this time, remain optimistic and positive, and to build strong businesses for the future. If you'd like any assistance or guidance on how to bring staff safely back into the workplace, or help developing a strategy for how you're going to embrace the next year, 2, 3, 4 years, please don't hesitate to reach out to 2SB Management Systems.